Oh man, we're gonna talk about Coffeezilla, the king of negativity, the king of everyone who talks about markets is a grifter and fake. All right, Coffeezilla, tell me why day trading is going to be certain failure.
Me with my index fund, according to the data, not according to anecdote, according to data, hard data, I'm outperforming 99% of day traders.
What is poppin' Snake Gang?
Today, I want to tell you.
I don't know what that was, but right off the bat, and a lot of you won't believe this, but it's the truth, right? And I can explain it. I know if you're a fan of Coffeezilla, you're not going to believe this at all, but this is true. People have gotten better at day trading, and a lot of those, and I think even Robinhood, the CEO of Robinhood, has talked about this. When those research studies were done, the level of what a hedge fund can know and what a average retail guy can know has closed. Like, it's nowhere near where it was. Like, maybe back in the day you had 10% of the knowledge and the data that a hedge fund can get. But that's with the amount of services and the democratization of information and the speed at which you can get that information. I mean, just think about what the internet has brought us, what X and even the availability of news has brought us. Services like FinViz or Options Death or Trading View. I mean, these things actually provide so much incredible value at reasonable prices for retail traders, or even just the change in, I mean, even just think about how back in the day, the amount of fees that would be involved with trading a stock or an option, that makes it much harder to actually outperform the broad market because it's so expensive even just to make a transaction. So if you're day trading and you're making all these transactions, you're racking up these insane fees because these fees used to be so much higher. So even with those changes, with there not being fees at all for stock trading, some platforms don't even charge fees for option trading, and fees have come down exceptionally for things like futures and stuff. Not only do you not need as much capital, and not only do you have advantages as a retail trader where you don't have to follow a prospectus and have a certain allocation in the market, you can pull out in cash and full cash in bear markets and stuff. You have a availability of data and flexibility, and the lack of fees from when those studies were originally done has all changed. The entire environment has changed. So the amount of people who actually are profitable in the market is far greater than what a lot of these old studies that these people report talk about. But since they don't actually know anything and don't think about this stuff, because they don't actually take it seriously when they make this content to learn about that stuff and learn about the advantages that retail um, has been given over time, but also has over a hedge fund. They don't consider any of that. So, things change and you got to change your expectations, and reassess what the environment looks like. I mean, let's continue.
Guys, about why you will almost certainly fail at day trading. Now, I made a video yesterday where I kind of memed on some day traders, made fun of them.
Literally 2:15 in the afternoon right now. Haven't even eaten nothing all day, man. Trader lifestyle is really difficult.
But it surprised me how many of you came back to me and said, oh, no, guru such and such is legit. No, my guru is legit. And I think there's a fundamental disconnect here because, as I understand it, day trading is a game that you will almost certainly lose. And it's clear to me that a lot of you guys don't believe that, and maybe that's because of all the marketing that's been going on with these gurus. So I want to set the record straight. Just for a second, set aside your favorite Forex trader, your favorite day trader, because they're trying to sell you something. Let's be honest. They're trying to sell you something. They have incentive not to tell you the honest truth about day trading. And maybe even they will tell you, oh yeah,
I mean, that's fair. A large majority of people will not make money. And even if you do eventually make money, you're probably going to lose a lot of money to get there. And I don't think there's anything wrong with selling things. I know there's a lot of scams, but there is a lot of good info out there. Personally, I don't sell any courses. I think the education part should be free because even if you have the education, it doesn't really help with the execution. So, especially since once you actually have a strategy, then it's all psychology, and a lot of people are not good at mastering their own psychology. So I don't think there's anything wrong with that. I know that he thinks anyone who's selling anything, they're going to spin a story. But, you know, I don't see people making videos about Alex Hormozi doing something bad because he tells people you should be an entrepreneur, but the success rate is pretty much the exact same. But no one throws a huge fucking fit about that. And there's really no difference because you can ruin your whole life trying to build a business from scratch. But people just, that's okay, but losing some money on the market isn't. It's like this like huge moral issue. This is stupid.
A lot of people lose, but here's why you won't. They'll give some reason for why you're special or why they're special and how they're going to suddenly make you successful, even though the majority of people fail. Most people kind of know that. But let's go over the actual numbers, because I think getting familiar with the actual statistics helps people make better informed decisions. I did this with Amazon FBA. When Amazon FBA was all huge, I did a video showing that only 8% of third-party Amazon sellers make even a fry cook's income, guys. Like, not a lot of money, just a fry cook's income. Only 8% of third-party Amazon sellers will ever hit those numbers. So in this video, I want to do something similar and just show you how difficult day trading is. And I know a lot of day trading is...
I mean, this shit drives me nuts. It's statistics, right? It's just statistics. Most people suck at most jobs. There's people who are doctors who suck at being a doctor. There's financial advisors who got the licenses and they suck at financial advising. You know, there's athletes who aren't professional athletes. You tell them, no, you can't go pro, so don't do it. Or you don't have the potential. That's not really something that you, or like the way I look at it, that's not really something that I get to decide for you. Like, I don't get to decide that, well, since most people can't do this or make it, I shouldn't make content about it because, you know, people might be a little overconfident. That's for them and their life's journey to figure out. And if they figure out it's not for them, if they're not good for it, if they don't have an inclination for it, they don't have the personality type for it, it's not up to me to be all pretentious and be like, I'm the only special, you know, like, is that really the proper way to conduct yourself when you're making this I don't think it is. I think you should be optimistic and say, hey, if you stick with this and you want to learn, like, why is that optimism a bad thing? It's so whatever. All right. I'm talking too much. Let's hear what he's got to say. Let's actually get to the substance of this video.
About that excitement, the hustle, the day trader life. But I think if you get a good grasp of the numbers, if you understand the numbers, you won't be so convinced. So I'm hoping those of you who are kind of mathematically savvy will really pay attention to this video and understand the studies, the statistics behind all this, because you guys can't escape the reality of statistics. So before we get into these studies, because we're gonna go over two important scientific papers about day trading, I first wanna say, to those of you who are gonna say, oh, scientific papers.
So this one's actually pretty recent. This is somewhat recent. Things have still changed pretty substantially. So this was written in 2019, but it looks like the data collected was a lot older rather. Sorry, I'm reading for what this is, what the individuals are. I don't know anything about this.
About day trading. I first want to say, to those of you who are going to say, oh yeah, of course, the majority of day traders fail, the majority of YouTubers fail, the majority of anything fails.
Wrong. Proved over and over again.
Wrong. The problem with that is that investing is one of those rare kind of domains where you can get all the advantages of investing with basically no effort using something called an index fund, which is what I use, and it's a passive investment tool where you just put money in, you set it, you forget it. And over time, index funds have consistently outperformed almost every other super flashy investment.
Why is that different? Why does that make it different? That does not make it different. I mean, if you just want to buy an index and you don't want to put the time and investment into trading, that's fine. But I mean, how does that make it different? It fucking doesn't. This is what you want to do, and where you want to allocate your time, and you want to take this seriously and treat day trading as a business and put in the appropriate time, allocation of time to learn and the money that you're going to, you know, you can spend that money paying someone to teach you how to woodwork, or you can spend that money learning some lessons in the market. Just because there is an index, that doesn't make any difference, right? I mean, what is the big? That's not. I don't know. That's like a false equivalency. That doesn't make sense.
Tool. So you can, with basically no knowledge or effort, get the vast majority out of the stock market. You know, you might not be making as much as Warren Buffett a year, but you don't have to do anything.
Was it? not even making as much as Warren Buffett. At least he's smart enough to realize that Warren Buffett's a stock picker, and he's not going to pull that old Warren Buffett quote where Warren Buffett said that no one can beat the index. Oh, really? Because that guy tries to beat the index every year, and he has.
You're not spending your life on finances. Whereas, as we will find, the majority of day traders who are spending their life looking at a screen trying to, chart the data, they're not even outperforming an index fund. So myself and maybe you, if you decide to invest in index funds or whatever you decide to invest in, you can basically be doing nothing and outperforming a vast majority of these day traders who are flashing the Lambo and whatever. You're making more with your.
Are we talking about day trading or are we talking about stock picking? Does he know the difference? I don't know if he does. I think, are we talking about stock picking and investments and we're going to beat the index? Because if you're day trading, you're not beating the index. That's pretty freaking wild, right? I mean, beating the index is not a benchmark for day trading at all. Like, you should be massively crushing the index, obviously. But he's talking about even getting profitable. And there's probably a good amount of people who just trade sideways. But beating the index is not a challenge if you're a trader. It's like not hard at all. I mean, it also depends on how much capital you have and how fast you're growing that. Obviously, the more capital you have, the harder it is to grow the overall percentage of the account. But yeah, whatever. We're getting too nitty gritty here.
Index fund. So let's go over the numbers. I want to show you guys in the data. Let's jump in. So the first paper we're going to be looking at is Day Trading for a Living, where they do a brief summary of the literature on day trading. And they explain the following. Study after study has proven that the majority of day traders don't even make a profit. They lose money day trading. Check this out. This paper found that only 36% of day traders profit. Another study finds that 25% of all retail day traders profit.
Yeah, this data is too old. Doesn't matter. Things have changed. Even when you're talking about these time frames, 2009, 2003, 2005, again, fees are less. There's more of a democracy. We've already talked about this. We've already even rebutted this before the video started. Maybe I taught too much at the beginning of this.
Another study finds that only 19% of day traders profit. So most people are losing money. That's already.
I mean, that's pretty good. That's way better than most of these research. 19% profit net of fees. What were the fees for trading in 2007? We'll do 08. So it was $8 to $10 per trade for stocks in 2008. Which is substantial because now it's completely free, right? Options. It looks like options for a lot of brokerages are same, but now they're zero. We're looking for. It's about $1. It's about, well, no, I'm seeing here some say $3 to $5 per trade. Now, even on the upper end, it's like $1 per trade. And then future, well, what is this study doing? Retail, day traders. So we're looking at stock traders, similar conclusions, the trade records of clients, the other study performance. It doesn't say stock index futures market. Oh, so we're talking about futures. There's such a wide variance on futures, though. Fees are completely different than they used to be. So who knows what kind of fees we're talking about here. Let's see if I can find an average. So we're talking about 5 to 10 per contract for on the lower end. On the very low end for 2008. And
only 19%.
And the availability of information, the availability of data that you have has changed substantially.
So most people are losing money. That's already
it was 19%
right? But how many people are actually making?
It's probably even higher than it is now, which is even higher than it, much higher than it is to actually succeed at being an entrepreneur, which is, they're basically one and the same, being an entrepreneur and trading, but that's a pretty high rate of profitability, actually.
more money than you would with an index fund? Because I'm going to assume for a second that you guys don't want to waste your time day trading if you're not making more than an index.
And I mean, just think about that. I mean, the fact that some people fail at it, I mean, failure is a part of life. I mean, it really is that bad? If you try it, you probably learn some things that are helpful. You learn some things about yourself. Is that money not worth that? I guess some people don't think like that, but it's just money, man. Like, it's not, that's a small portion of what's actually going to give you value out of your life, you know? So that experience is worth the money if that's an interest that you have, in my opinion.
Index fund holder like me, right? So with that in mind, let's turn our attention from not just who can profit at all, but who can profit more than an index fund, right? Who can make more money than you would if you just set your money and kind of forgot it? Well, this is where we go to another study called the cross-section of speculator skill. This study looked at day traders in Taiwan from 1992 to 2006, and here's what they found. Less than 1% of day traders are able to predictably and reliably earn positive, abnormal returns net of fees. So after you pay your fees.
Was an abnormal return. That's not that's positive abnormal returns. I mean, obviously when you're talking about outliers, when you're talking about the best of the best, you know, then you're talking insane stuff, right? And then you also got to talk about, can those people actually consistently be abnormal amount of returns? I mean, that's pretty ambiguous.
Normal returns net of fees. So after you pay your fees, 1%, actually less than that, less than 1% is able to earn an above average return. Do you understand how crazy that is? So me, with my index fund, I'm just sitting here, right? No matter what the gurus say, they can say that they're special all they want. Me with my index fund, according to the data, not according to anecdote, according to data, hard data, I'm outperforming 99% of day traders. Now, part of that is because of the fees, but part of that is for another reason, because this is looking at what's called retail traders. And retail traders are people like me and you who are just handling our own money. We're not working for a bank. Now, we need to consider institutional traders, because when you're trading, right, you're trading across the table from somebody, and more often than not, that person might be an institutional investor. In other words, a bank. And this is where we go back to.
He's using investor and trader so interchangeably. I'm not really sure if he knows the difference.
Our next study.
Which just makes this even more frustrating, because it's like, if you want to talk about this stuff, really, really learn about it and learn what's changed. And people think that this guy is like the fucking know-it-all cop of, you know, the internet detective. I think it's literally what he calls himself, but he hasn't really deeply learned about this stuff in a way that allows him to have the amount of criticisms that he could deploy, because he doesn't have enough tools in his toolkit, because he hasn't actually deeply learned about this industry.
Once again, it's day trading for a living. And what's interesting about this study is they say, hey, we think that actually the fact that there are more hedge funds than ever, the fact that institutional investing has gotten bigger than ever, the banks are a bigger and bigger percentage of the total shares traded every day, that fact puts retail traders at a disadvantage, because now it's not just Joe Blow on the internet versus Joe Blow on the internet, you know, Adam versus Adam. Now it's Adam versus gigantic hedge funds supported by quants, right? It's Adam against Renaissance Technologies, one of the few hedge funds which consistently has outperformed the stock market, who, fun fact.
I mean, that's like one of the best funds ever created, right? They don't even, well, let's see if he says it.
1/3 of their employees have a PhD in like math, computer science, or physics. That's who you're trading against sometimes. And so what this study looks at is, look, given that hedge funds are bigger than ever, what's happening?
I mean, even then, they're just a small, I mean, they're massive, but when you think about the size of the market, you know, U.S. market is like 24 trillion or something. Let's double check it. $50 trillion. And they manage over 100 billion. I mean, that's nothing. That's a drop in the bucket. There's literally so much money sloshing around. You're talking about, he's naming one hedge fund who is the best, by the way. They are the best. He named the best fund. When kudos to him, most people don't even know Renaissance exists or knows that's a big name. You know, they average like 60% returns, but they charge like 20% fees for that. So those people are still walking away some pretty good returns, and it's all quant based. And usually the best hedge funds are quant based funds. But yeah, they're playing a completely different game. You aren't necessarily trading against them, especially when you're talking about competing against banks. Okay, are we talking about high frequency trading? Because that's what most of the CTHs do, is these high frequency trading. So if you're a swing trader, that's not what you're competing against, right? if you're just a stock picker, you're not really competing against anyone. You're just competing that you're going to pick something that's going to outperform the index, right? You're just joining the participant pool and betting on the company, right? There's not really as much competition with that as there is with something like options trading or future trading. So, you know, there's a lot of different games you can play, and in Forex as well, and commodities, you know, and which one you choose to participate in is it's going to dramatically change what the competition outlook looks like. But at the end of the day, you have to consider the fact that, like, even the best performing hedge fund ever, it's only 100 billion. It's a $50 trillion market. Like, that's a drop in the bucket. So yeah, there's these killers out there that, you know, I couldn't even compete against, right? If I had to 1v1 Renaissance Funds quant that was built by 12 top in their class PhDs from MIT, yeah, I'd probably lose. Luckily, I don't have to play that game because there's a lot of different games you can play in the market.
To the retail day trader, right? The guy who's trading all the time against these people. Are the numbers for day traders actually getting worse? And yes, they are. Because according to this study, which looked at the Brazilian futures market, this study found that only 3% of day traders were profitable after 1 year. Guys, that is insane. In other words, not profitable after 1 year. Guys,
that was from 2013.
This study found that only 3% of day traders were profitable.
Reserves in the so that was in the Brazilian equities futures market. Okay, I don't know what that data is like. That's not the same market. Could be completely different. I don't know what those brokerages are like. I don't know what those fees are like. I don't know what happened during that time frame in that market. 2013, 2015.
After 1 year. Guys, that is insane. In other words, 97% of them lost money. And this
So that's also different from stock trading, right? So these are like all different fields and completely different markets. The number of variables here and even the amount that things have changed from then to now. A lot has changed. It changes very fastly. Is fastly a word? Fastly is a company. That's over a decade ago now.
Paper is really clear about who they're trying to convince with the findings. They say this.
Let me think, 2015, actually, that would have been, I would have known about, but I hadn't started trading then. Because did I own stocks then? No, I think I got really active and I was truly trading by like 2018, but was aware of the market a few years before that. But I don't remember when I actually bought my first stock.
Check this out, quote, "It is now very easy for anyone to enroll in one of the many online courses about day trading or to join live trade rooms on YouTube where traders teach retail investors how to trade in real time. We show that it is virtually impossible for an individual to day trade for a living, contrary to what brokerage specialists and course providers often claim." Snake gang, that is it. Snake gang, that's all you need to know, period. That totally nails it. Virtually impossible for an individual to day trade for a living, contrary to what brokerage specialists and course providers often claim. And one of my favorite parts about the study is not only do they call out course providers in a scientific paper, but also they say, okay, look, even of the people, the 3% of people who are consistently at least going positive, how much are they going positive, right? How much are they profiting? Is it even possible for the people who are profitable to be profitable enough to be a millionaire or to make all this money, flashy lifestyle, Lambo, whatever? Well, this is where it gets interesting. And it reminds me a lot of our Amazon study, because check this out. In order to make a minimum wage day trading, you have to be in the top 2.7% of day traders. Let me repeat that. 2.7% of day traders, top 2.7, in order to make a minimum wage. This is worse than Amazon FBA. At least Amazon FBA had 8% of them making a fry cook's income. So, I mean, like, now Bezos is looking great compared to day trading. But in order to make the profits of a bank teller, what a bank teller makes, you have to be in the top 0.6% of day traders. Now, guys, let's be honest. If you're looking up YouTube videos about day trading, you're not in the 0.6% of day traders. Let's just be real. And let's also be real about the fact that you can enhance your wealth by having a real job and just invest.
I mean, that's just fucking rude. How am I the a-hole for trying to teach people about what I do? And he's not for being like, you fucking retards aren't going to make any money. You're too damn stupid. Just give up. But I'm the jerk. Okay.
investing in an index fund. So I hope this really clears up a lot of the confusion about day trading. You know, there's obviously a lot of hype around this industry. Even now, scientific papers are calling out core sellers for their fraudulent claims. But guys, at the end of the day, you guys have to look at the data, not at the hype. You have to look at the math, not at the madness. So I hope this has helped you get a better picture of, is day trading right for you? I would go out on a limb and say that it's not right for almost everyone. Most people are better cut out for just passive investing. But whatever you guys think, I want to hear about it in the comment section below. I know not everyone's going to agree with this video, but I want you guys to tell me why you agree or disagree. Which part of it do you agree with? Do you think that there's some guru that still has a magical power with investing? Or you think that these economists are right, that with the rise of hedge funds,
Are we talking about investing? Are we talking about what the? I don't. Do you know what the fuck you're talking about? You should have future study. You should have stock trading study. Using investing and trading interchangeably, but they're like so vastly different from one another. I guess not in slight differences in execution. Maybe if you're talking about intraday trading between stocks and futures, you're gonna operate and execute sort of similarly. You're probably gonna have a little bit different risk management. Probably vastly different when it comes to setting a stop. I'm rambling too much, but like, whatever. I've already said my piece. Follow me for more React videos. That was exhausting.